Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing some more shorter-term technical analysis on Bitcoin, because in the last couple of videos, we've been doing longer-term technical analysis on Bitcoin, and we haven't looked at the shorter-term charts here in a little while. And if you guys have been watching the videos here over the last couple of days, then you will know that Bitcoin is currently below this 20 exponential moving average, and if you guys have been watching my channel for a while, you'll know that the 20 exponential moving average is the technical indicator I use to determine whether or not Bitcoin is in an uptrend or in a downtrend. And as you can see, for the first time in several months here, Bitcoin actually managed to fall below the 20 exponential moving average, which seemed to be initiating a new Bitcoin downtrend. At the moment, we can see that Bitcoin fell over and has gone up and rallied and actually seems to be rejecting off the 20 exponential moving average. There's a lot that we need to dive into here in today's video, because right now, it's very hard to do technical analysis on Bitcoin because it's giving so many mixed signals, but I do want to try and get to the bottom of what Bitcoin is actually doing, so we can then have some idea of what Bitcoin is going to do here for the next couple of days. Whether this rally that we've seen Bitcoin be in for nearly 120 days now is going to continue, or if we're going to see Bitcoin actually fall over, slump, and move all the way back down to $6,000. We're going to be discussing all of that and more in today's video, guys. So if you do enjoy today's video, make sure you smash that like button. Absolutely destroy that like button and tell me in visceral detail exactly how you did so in the comment section down below. Also, make sure you hit that subscribe button and the notification bell, guys. So without much further ado, let's go ahead and get right on into it. The first thing I'd like to do is, of course, run over the recent history of Bitcoin and show you guys how we got to where we currently are. Of course, we know the Bitcoin bear market fell below $6,000, ran all the way down to $3,000 at the bottom, and from there, Bitcoin managed to rally above the 20 exponential moving average. And I remember discussing back here in January and February saying that if Bitcoin can get above the 20 EMA, which at the time was a very big if, there was a good chance that Bitcoin could have gone lower. If Bitcoin could get above the 20 EMA, it would be very good for Bitcoin. It would propel Bitcoin in the northerly and the bullishly direction, the northerly direction. I can speak. It would push Bitcoin to the upside, because whenever Bitcoin's above this 20 EMA, it's in a rally. And of course, I thought that rally was going to go to $6,000 and then stop. I was wrong on that. Bitcoin actually broke straight through $6,000 and managed to absolutely destroy that level of resistance. We didn't even stop for gas, guys. There wasn't even a pit stop. Nobody, I mean, we didn't even stop, we didn't stop at all. Bitcoin broke straight through $6,000 and ran all the way to a recent high of $9,150 and change. So guys, the first thing that we need to point out is that yes, Bitcoin has been rallying for a very long time. That does mean that we would expect some kind of downtrend. That all being said, something interesting has happened here over the last couple of days. When Bitcoin fell below this 20 EMA, it didn't stay down here for long. We saw one red candlestick close down here, and then we've seen nothing but green candlesticks come up here. And now we find ourselves at another one of these critical decision points, guys. I talk about decision points on the channels a lot. I say, okay, well, Bitcoin's deciding if it's going to do X, Y, or Z, or X, Y, and Z right now. What is Bitcoin doing? What's the future of Bitcoin over these next couple of days? What is Bitcoin actually going to decide that it wants to do? And Bitcoin finds itself at one of these decision points right now, because as you can see, Bitcoin looked like it was going to try and rally back up through and break the 20 exponential moving average, and we'll discuss some technical indicators on why that might still happen in a little bit. But at the moment anyway, we're seeing a red candlestick form here on Bitcoin, which is indicating that we might see some kind of rejection off of here. So let me go ahead and describe the two decisions that Bitcoin can make here. They're very simple, but they're also very important. Either one, over the next couple of days, Bitcoin manages to rally, break through the 20 EMA, and continues to the upside. From there, I'm not going to get into just how bullish Bitcoin could be. It could run to $9,000, it could run to $10,000, it could run to $20,000. That really all depends on how Bitcoin breaks bullish. That's a very hard thing to predict right now. But if Bitcoin keeps going in this trajectory with this red candlestick and does reject off of this 20 EMA, it's a little bit easier to predict. And the reason for that is because it's a lot more bearish. Breaking Bitcoin's 20 EMA could be a ever so slight bullish thing, or it could be one of the most bullish things that's happened in the last couple of weeks. But when Bitcoin rejects off the 20 EMA, that would be confirmation of a new downtrend. Like I've been talking about, we were looking for a confirmation of a Bitcoin downtrend after Bitcoin broke this 20 EMA. Was Bitcoin actually going to retain this bearishness and keep pushing to the downside? Well, no. Bitcoin actually had 3 green candlesticks that pushed it back up here to the 20 EMA. But if Bitcoin does actually go ahead and reject off of this level of resistance, this 20 EMA, then that would be a decision point right there that would really confirm to us that Bitcoin is entering a new downtrend. This is a very important point right here. I want to see what happens over the next 72 hours. And guys, it's not really obvious. Like I said at the beginning of this video, it's a little difficult to do technical analysis right now because there's so many conflicting signals. It's not exactly obvious what Bitcoin is going to do here. I'll tell you what my gut says. My gut is a little bit more bearish than bullish, but we'll see what happens. With that said, let's dive into some technical indicators and see what they say. One of the first ones I want to bring to your attention is MACD. And I'm going to go on a little bit of a rant here about MACD because you guys, I think a lot of people trade MACD wrong. I was talking to someone about this in the Discord server a little while ago. Let's see, it was Draymond Lee, it was Yonsre Lee, the winner of our giveaway about a week ago, actually, who I was speaking about this with. In the MACD, you have two lines. You have the MACD line and you have the signal line. This line right here is the signal line, and this right here is, this right here is the MACD line, and this right here is the signal line. These two lines are calculated in a certain way. I'm not getting into it. They're based on these numbers over here. The thing I want to talk about is how you read signals on the MACD, because we're about to read a signal from the MACD, and it's not a signal that a lot of people realize is a proper signal, because a lot of people trade the MACD wrong and they don't look at it properly. Let me show you something. Let's go back here to the weekly chart on Bitcoin out here and check the MACD. Let's look at the MACD and look at the signals it was giving us. What kind of signals do we get from the MACD here over the last couple of months, really, the entirety of this year? Well, we see that there was a cross right here, and most people trade MACD based off of the cross. So what do we see down here? Well, that just so happens to be the beginning of this rally where Bitcoin rallied to the upside. Now, that seems pretty good. Bitcoin had a cross on the MACD. That was on the same candlestick that we saw a gigantic rally for. Clearly, we want to trade the MACD based off of its crosses. Wrong. You could not be more wrong if that's what you say, because that is not how you trade MACD. You don't trade MACD based off of the crosses very often. Now, I know that sounds counterintuitive. I know that's probably not what you were expecting, especially if you're a newer technical analyst, but you don't actually want to trade based off of the crosses all that much. That's not how you trade MACD all the time. Sometimes it is, but oftentimes the crosses are a lagging indicator. They can lag by as much as 4 to 5 candlesticks before you actually see the cross, before you actually see the movement. I'll show that in a little while. But what I want to point out is where Bitcoin's histogram changed direction. As we can see here, guys, the MACD lines were diverging. If you guys know what MACD stands for, it stands for moving average convergence and divergence, because the MACD is measuring the convergence and the divergence of these two lines, which is what this little bar graph down here is for. This is called the histogram. This is a very important piece of the MACD that people always overlook. They just say, okay, well, I'm looking at the lines, and they completely ignore the histogram. The histogram is defining the distance between these two lines. And as you can see on this candlestick right here, the histogram started closing in on itself. Instead of these lines getting further apart, as you can see, they were broadening, they were widening out here. Instead of them getting further apart, they started narrowing and constricting. The two terms for that would be diverging over here, diverging right there, and converging over here. Bitcoin started converging instead of diverging on the MACD. And guess what happened right when Bitcoin started converging on the MACD? That was the absolute bottom of the Bitcoin bear market. Bitcoin never went that low again. $3,200, right around that time, that's where the Bitcoin MACD, moving average convergence divergence, started converging on itself and started moving bullish. And an interesting signal that we've gotten here recently is, as we can see, Bitcoin is no longer diverging on its MACD in a bullish way. You can have bullish divergence or bearish divergence. You can have bullish convergence or bearish convergence. But we're seeing bearish convergence on the MACD right now, because these two lines are moving in on themselves. We've had this massive red candlestick here on the weekly chart, which is starting to look like it's going to close very red on the weekly candlestick, on the weekly graph, and we see that these two lines are now closing in on themselves. We can see this on the height of the histogram right here. Our current bar on the histogram is a little bit shorter than the other one, hence the color change. And what that means is that that's a big signal, because as we can see, we had a very major signal on the convergence and the divergence of the MACD lines over here at the bottom of this market, and now we're seeing one over here at the top of the market, right over here on this exact candlestick. That's why I have the crosshair tool up. That's why I have this up, is because on this candlestick exactly, this one that looks like the top of a market, that's where we're seeing the top right here. So even though, guys, even though on the daily chart we are seeing the MACD is converging bullish, we see that we can see that Bitcoin is having the two moving averages are converging in a bullish way rather than converging in a bearish way. These two moving averages are closing in on themselves and looking like they're going to have a cross in the next maybe 5 to 6 candlesticks. Even though we're seeing bullishness on the daily chart, we're seeing bearishness out on the weekly chart in the longer term time frames because of this massive red candlestick. Now I want to point out that we've only seen one red candlestick, and moving average convergence divergence, MACD takes into account a couple dozen of the last candlesticks. Like I said, I'm not getting into it. It's based on these 12 and 26 numbers. We go over that in the Cryptocurrency Technical Analysis Academy in our MACD video if you'd like. So if we do see a green candlestick next week, if we do see a green candlestick, these are probably going to continue to diverge. But that does mean that if Bitcoin sees 1 or 2 or 3 more red candlesticks, then we're going to probably see a bearish cross on the MACD. And we haven't seen that in a while. We don't really know exactly what that that would cause. They don't happen very often in bull markets unless we're looking at very long-term downtrends in the middle of a bear market, in the middle of a bull market, excuse me. Another thing I want to bring up that might be temporary or it might be prolonged, we'll see exactly what happens, is the stochastic RSI. You guys know that I've been looking at stochastic RSI for a very long time, and we are actually curving to the downside. Now, like I said with MACD, if Bitcoin does curve up and start moving green again during the next weekly candlestick, then both of these signals will likely be pushed off a couple weeks or maybe even up to a month when Bitcoin does actually have some kind of retracement, because a major retracement is coming. It might not be now, but it is coming. That's just a fact, guys. That's how markets work. But in the end, we're going to see stochastic RSI start to fall off, because that's normally what happens in these markets. We see stochastic RSI fall off when Bitcoin is having its downtrend that you see every couple of months during a bull market. Now, with that all in mind, I do also want to look at the Heikin-Ashi candlestick chart, charts, because you guys are probably familiar with Heikin-Ashi if you're in the crypto. Well, I know you are if you're in the Cryptocurrency Technical Analysis Academy. You probably are if you're not in CT2A. But essentially, what Heikin-Ashi does is it boils down a lot of the noise and a lot of the static in markets into a much more readable form, so that you can get a better idea of when Bitcoin's actually moving to the upside, how strong it is moving to the upside, and when it's moving to the downside, and how strong it is moving to the downside. As you guys can see here, Heikin-Ashi was green for 4 candlesticks in a row, in the first time in a very long time since back over here in late April, and we've actually turned green again. And interestingly enough, this candlestick that we have today, even though it's red on the normal candlestick charts, we can see that it's a little bit red. It's actually green on the Heikin-Ashi charts because the last 4 candlesticks have been green on typical charts, which means that we don't even have a bottom wick right here. So on the candlestick charts, it looks like Bitcoin might be bearish. It looks like Bitcoin might be rejecting. On the Heikin-Ashi charts, it actually looks bullish. And the funny thing about that is that sometimes Heikin-Ashi will look the most bullish right before a downtrend. Let me say that again, because sometimes that can be hard to wrap your head around. Sometimes Heikin-Ashi candlestick charts are going to look the most bullish right before a downtrend. A good example would be right here. We looked the most bullish on this Heikin-Ashi candlestick chart, on this Heikin-Ashi candle rather. We saw there was no lower wick. We saw a tall upper wick, which is actually bullish on Heikin-Ashi. It wouldn't be bullish on a normal candlestick. And from there, we saw a 4-day downtrend. So that's not exactly the way you want to read Heikin-Ashi. That's not the best way to, but it is something I want to point out. So with all that in mind, guys, let's go ahead and try to make a little bit of a prediction here about what Bitcoin is going to do. Like I said, there's basically 2 things that Bitcoin can do. It can either break the 20 EMA and continue moving to the upside with bullish strength that is most certainly questionable at this point, or it can reject off of this 20 EMA and we can see Bitcoin come down even farther. What are the chances of both of these happening? Well, guys, I think before I make a prediction on this, before I make a percentage call on this, I want to see what the next 72 hours do. I know I say that sometimes, but it's very important not to jump into a trade or not to make a call when you don't know. And I don't know exactly what Bitcoin's going to do here, guys. Bitcoin could reject here. It could go bullish. We don't really know because it's a bit of a coin flip right now. Maybe that coin is a bit weighted. Maybe the dice are a bit rigged. Maybe the game's a bit set up to make you win or lose. But either way, sometimes one of the best trades that you can make is no trade at all. That's a very important concept. It's a concept that I can't remember who said that, but they said it so much more eloquently than I just did. It's a quote something like, when winning is an option, but so too is loss, sometimes the best move is to not move at all. That would be the kind of quote I'm trying to think of. I don't remember who said that. But sometimes that's the way you want to approach trading, is to have a bullish side of yourself, have a bearish side of yourself, and then not pick either of them and just not make a trade. Sometimes the best trade that you can make is to not trade and then use that trade as a learning experience. And right now here, guys, this is telling me it's going to break bearish, but that's basically only because of this red candlestick, and that can change at any moment. Bitcoin could rally $100 and make that green and completely change that prediction. So I'm not going to make that prediction right now. I'm not going to weigh in on which direction I think Bitcoin's going to go here because I don't think there's enough data on the table to make a reasonable and certain prediction about what Bitcoin is actually going to do. That's why sometimes when I feel that way, I'll lay out both sides of the argument. We'll say what happens if we go bullish, what happens if we go bearish. If we see a breakout of some caliber in the next 24 hours, tomorrow's video will be me discussing predictions about where Bitcoin goes. It's not so much trying to figure out price targets. That's the hard part. It's trying to figure out which of the 2 options Bitcoin will decide to take. So guys, that's pretty much what I wanted to discuss on today's video. I actually wanted to dive pretty deep into MACD and show you guys how to properly trade MACD. So I hope you guys got some good value out of that. And I hope you also understand that concept of sometimes the best trade you can make is no trade at all. Sometimes if you're not confident on a trade, instead of forcing yourself into one of 2 options, either buy or sell or long or short, instead of doing that, step back, ignore trading for that moment, watch what the market does, and use it as a learning experience. Oftentimes, you will gain far more from watching the market than you will from trading the market. If you trade the market, sure, you might make 2 or 3%, but if you step back, don't have any money in the market, don't have any emotional connection to the market, and you're able to look at it and analyze it and learn from it, that's so much more valuable than whatever money you would have made based off of the trade. So I hope you guys did enjoy those 2 lessons on MACD and on the actual ability to not trade. There's always 3 options. There's always 3 options. Buy, sell, or not do anything at all. Before we wrap the video up, I do want to mention one little tiny piece of news that some people have been talking about here. If we go over to Twitter, Mr. A. Pompliano, I hope I'm not butchering your name. I know that he's a very big cryptocurrency person. I'm pretty sure I'm saying that name right. India is proposing a 10-year jail sentence for those who mine, hold, or transact with cryptocurrencies. And I completely agree with his assessment here. I highly doubt this will get passed, but if it does, it would actually have the opposite effect and actually drive adoption. So good on you for pointing that out. That is something that's been in the news lately, is India proposing a ban on Bitcoin and cryptocurrencies and a jail sentence for those who use them. Guys, I don't really know Indian politics all that well. I don't think that that's going to go through, but if it does, it's obviously, like A. Pompliano said, going to probably drive adoption in... probably drive adoption in the way that they're not expecting. They don't want Bitcoin to be adopted. Well, if you make something taboo, a lot of times people go and do it anyway. That's kind of what we're learning in the drug sphere in America is, oh, we just made drugs illegal. Oh, wow, everybody's doing them now. And then when you make them illegal, nobody cares anymore because the fun wore off. And Bitcoin's not about the fun. But when you see a government or some kind of high-level institutional actor acting as if Bitcoin is a threat to them, you start to see all of their enemies come out of the woodwork, and you start to see all the people in our space, for example, like the libertarians in this space. I know most of cryptocurrency is a very libertarian kind of space. You start to see all your enemies come out of the woodwork. So if India bans cryptocurrency, then you start getting all of the enemies of India start thinking, what do we know about cryptocurrencies? What can we do with cryptocurrencies? Maybe Pakistan would start being very interested in cryptocurrencies. Maybe they'd start trying to learn something from them and gain a competitive edge that India doesn't have, which in the past is why I've talked about that if Bitcoin is actually banned in America or in the European Union, first of all, it wouldn't work. People would use it anyway. And second of all, it would be one of the biggest mistakes of the 21st century, in my opinion, because we have such a major industrial capacity to actually use Bitcoin and the cryptocurrencies to our economic advantage. And if we pass up on that, some other country is going to go ahead and use them to their advantage. China and Russia come to mind. So let's make sure that we do utilize cryptocurrencies, we do embrace them, and we do help propel them towards mass adoption, even if countries like India don't seem to be all that fond of them. Anyway, guys, that is going to wrap it up for today's video. If you did enjoy today's video, what I want you to do is go down to the comment section down below and tell me what you thought about the video. What did you think about the technical analysis, and where do you think Bitcoin is going? Are you going to be trading this market here over the next couple of days? Because I know I'm not putting a penny in it right now into a trade because I'm not quite sure what Bitcoin's going to do, and I don't think it's unprofessional or anything for me to admit that. I think a lot of people would do a lot better if they did admit that sometimes, that they're not quite sure what's going to happen, because that's when you learn the most, is when you don't know what's going to happen and then you see what does happen. So like I said, tell me in the comment section down below what you think Bitcoin is going to do, and also, more importantly, what are you going to do? Are you going to trade this? Are you not going to trade it? And guys, if you did enjoy today's video, smash that like button. Destroy that like button, guys. I want to hear all of the stories about how you destroyed that like button. I want you guys to write me beautiful tales of, I don't even know where I'm going with this. Tell me what you did to the like button. Go ahead, smash it. I didn't get anyone clicking the like button 1 million times in yesterday's video, so unfortunately, I don't owe any of you $5 million. As you can hear, Hubert is rather upset about that, but he'll just have to get over it. Anyway, guys, that's going to do it for today's video. I do want to thank each and every single one of you for watching, as always, and I will see you guys in the next video. Peace.